Bitcoin, the world's largest cryptocurrency, has been making headlines for its rapid growth and its potential to change the financial industry. But can it really reach $1 million? In this video we'll take a look at the facts, hear from the leading experts in the field and examine the data to find out more. So if you want to find out more, watch the video until the end, smash up the like button and subscribe, and now let's directly start with this video. First, let us take a closer look at why some of the experts believe that Bitcoin could reach $1 million. With a finite supply of 21 million Bitcoins, its scarcity and the increasing demand for it makes it a valuable investment opportunity. Bitcoin's potential to reach $1 million is rooted in its adoption curve, which refers to the growth in the number of people and businesses using Bitcoin. The following factors contribute to the growth of the adoption curve and the potential for Bitcoin to reach $1 million. Increased awareness. As more people become aware of Bitcoin and its benefits, they are more likely to invest in it and drive up demand. Widespread adoption. As more businesses and individuals adopt Bitcoin as a means of payment and store of value, it becomes more widely accepted as valuable. Improved infrastructure. As the infrastructure for using the storage of Bitcoins improves, it becomes easier and more convenient for people to use, which contributes to its growth. Government recognition. As governments around the world begin to recognize and regulate Bitcoin, it becomes more legitimate and trusted, further contributing to its growth. Favorable economic conditions. Favorable economic conditions such as low interest rates, high inflation, or financial instability can drive demand for alternative assets like Bitcoin and contribute to its growth. In conclusion, the adoption curve of Bitcoin is an important factor in its potential to reach $1 million, as the growth in its number of users and businesses using Bitcoin drives demand and increases its value. Bitcoin has the potential to change the world and the financial system in several ways. Some of the key reasons include decentralization. Bitcoin operates on a decentralized ledger, which means that it operates independently of any central authority or bank. This eliminates intermediaries and reduces the risk of fraud and corruption. Security. Bitcoin transactions are secure and protected by cryptographic algorithms, making it more difficult for hackers to steal or manipulate data. Transparency. The blockchain technology that underlies Bitcoin is transparent and public, enabling anyone to view and verify transactions. This enhances trust and accountability. Borderless transactions. Bitcoin can be used to send and receive payments anywhere in the world, without the need of intermediaries or cross-border transaction fees. Inflation hedge. Bitcoin has a limited supply of 21 million coins, which helps to mitigate the risk of inflation and currency devaluation. In summary, Bitcoin has the potential to change the world and the financial system by providing a more secure, transparent, decentralized alternative to traditional financial systems. Next, we will hear from Cathie Woods, the CEO of ARK Invest, who has been a strong advocate for Bitcoin. She will share her thoughts on its potential and what makes it unique in the world of finance.
Cathie, I want to switch gears and ask you about one of the other predictions in the report, and that has to do with Bitcoin. And of course, this has gotten a lot of attention, as many of your predictions do, that you guys are still looking for $1 million or more in Bitcoin value going out to 2030. As I said, this is a controversial take after the drubbing and then some that we have seen in Bitcoin. Walk me through it here. Like, how do we get from here to there?
Yes, and you can see the building blocks in Big Ideas 2023. But if you and the assumptions you'll see are very conservative. In fact, we've dialed them down. From just take institutional managers looking at Bitcoin as a new asset class, and they are. We've seen Coinbase and BlackRock hook up recently. It's because institutional investors want access to this new asset class, which the returns of which, the correlation of the returns are low, which is exactly what they're looking for. Let me just step back and just say, last year was a disaster for crypto generally. However, if you look at the Bitcoin blockchain, it did not skip a beat. No transaction was interrupted. It did what we thought it was going to do. And it is no surprise to us that Sam Bankman-Fried did not like Bitcoin. Why? It's completely decentralized and completely transparent. And he couldn't control it. His firm, FTX, was completely centralized and opaque. So we think that as investors reflect on what happened last year, the failures were those companies that were not decentralized, were not transparent. Bitcoin didn't skip a beat. And if you watch what's going on, especially in emerging markets, there's hyperinflation all over the world as their currencies have fallen apart and as their fiscal and monetary responses to COVID are now proving in some cases to be disastrous. Those individuals, those populations need a fallback, an insurance policy like Bitcoin, as do high net worth individuals who are worried that their wealth will be confiscated. Inflation is confiscation of wealth, but then there's outright confiscation, and I'm sure that there are individuals in the troubled spots of the world, the Russias, the controversies in China, who are looking for that fallback in case something really wrong happens to them in these countries. There are tycoons who understand what their risks are. So we believe that in insurance policies, that Bitcoin is probably the best insurance policy. Just keep that key in your head, and at some point you'll be able to cross a border and reclaim your wealth.
Finally, we're going to examine the data to see if the market supports the idea of Bitcoin reaching $1 million. We'll look at the past trends, current adoption rates, and the role of institutions in the growth of the cryptocurrency market. Digital wallets disintermediating traditional banking. Having onboarded billions of customers and millions of merchants, digital wallets could transform the economics associated with traditional payments transactions, saving them nearly $50 billion in costs. With 3.2 billion users, digital wallets have penetrated 40% of the global population. ARC research suggested that the number of digital wallets users will increase by 8% at an annual rate, penetrating 65% of the global population by 2030. As consumers and merchants adopt digital wallets, the usage of traditional checking accounts, credit and debit card, and direct merchant accounts should decline, disrupting traditional payment intermediaries. Cutting out middlemen, digital wallets could facilitate closed-loop transactions for more than 50% of their payment volumes, potentially adding $450 billion to the current $1 trillion in digital wallet enterprise value by 2030. Bitcoin, a durable network. We believe Bitcoin's long-term opportunity is strengthening. Despite a turbulent year, Bitcoin has not skipped a beat. Its network fundamentals have strengthened and the hodler base has become more long-term focused. Contagion caused by centralized counterparties has elevated Bitcoin's value propositions, decentralization, auditability, and transparency. The price of one Bitcoin could exceed $1 million in the next decade. The drawdown from Bitcoin's all-time high was the 5th largest and the 2nd longest in history. So we can see in comparison to all the previous cycles that Bitcoin is reaching a bottom and that this opportunity will be major in the coming years. Despite severe drawdowns, Bitcoin has outperformed every major asset class over the long time horizon. So in this chart you can see that Bitcoin has outperformed any other asset that is out there in the traditional market. Bitcoin's fundamentals are stronger today than in the past downdraws, so we can see that Bitcoin is still stronger in comparison to the previous cycles, even if Bitcoin dumped below its previous all-time high. So as we can see in this chart that the cost basis per Bitcoin is higher, the hash rate is even higher than the previous cycles, and the supply of Bitcoin last moved a year ago is at 66.5%. And the Bitcoin address with non-zero balance went up to the levels of 43%. And the long-term holder supply is around 71% in comparison to 66% in the previous cycle and 67.5% in the one before, and even the one that we had in the year 2017 of 51%. So we can see that the long-term holders are holding Bitcoin strong. And the Lightning capacity, which has been added in the year 2018, has also grown exponentially. Bitcoin holders are more long-term focused than at any point in history, and that is quite bullish, guys, because a lot of people know that the fundamental values of Bitcoin will just go up and that holding Bitcoin would be the best opportunity until the time that Bitcoin will be the reserve currency of the world. Exchanges have increased transparency in response to the collapse of trust in centralized crypto entities, and that is what's really important, centralized crypto entities. Guys, we have to think decentralized. A run on the bank forced a record number of exchanges to publish auditable financials and cryptographically verifiable attestations of solvency, otherwise known as proof of reserve. And this is a very important fact. You should hold your cryptocurrencies in your own wallet and not on an exchange. You should just trade them on an exchange, but guys, you should hold your cryptocurrencies in a wallet where you own the private key. Bitcoin's hash rate hit an all-time high in 2022. The number of computations per second produced by miners and proxy for network security has increased for 12 consecutive years, hitting an all-time high of 272 exahash seconds in 2022. Bitcoin mining is harnessing and containing natural gas emissions. Bitcoin mining is ideal for oil and gas well sites. It is distributed and highly scalable with modular hardware that can be transformed to add and shift among operating well sites. Because oil and gas well lifespans often are limited, Bitcoin mining could make the difference between high and low returns on investment. Institutions are committing to Bitcoin during a bear market. June 2022, BlackRock's Aladdin partnered with Coinbase Prime to provide institutional clients with a direct access to crypto. Starting with Bitcoin, connecting to Coinbase Prime, BlackRock's Aladdin could usher trillions of dollars into the asset class in the coming years. And yes, BlackRock is one of the biggest asset management firms out there with $1 trillion under investment. Bitcoin is likely to scale into a multi-trillion-dollar market. ARX Research estimated that the price of one Bitcoin could exceed $1 million by 2030. And yes, in this picture we can see that a lot of assets are waiting to enter the crypto market, and especially Bitcoin. So can Bitcoin reach $1 million? The facts, expert options and the data all point to the possibility. It is a bold prediction, but as the world's first decentralized digital currency, anything is possible. Stay tuned for more insight on the future of Bitcoin. And guys, if you want to buy cryptocurrencies, make sure to go in the video description below and sign up to BITGET, where you receive a massive deposit bonus. And guys, make sure to be for crypto, and we see each other in the next video.